You really just have to know your target ROAS, as we call it. Yeah. Which is the hard cash number of, what sales to come from first time customers, and how much have you spent every day? And that's every day, with, retailers, with traders, in my opinion, you have to know that number every single day of your trading. Then if you're massively above, you've got a great opportunity to go and maybe spend some more money and go faster. Or, if you're below, then you really need to be looking at how your channels are performing.
Welcome to the e-commerce podcast with me, your host, Matt Edmondson. Now, the e-commerce podcast is a show all about helping you to deliver e-commerce wow. And to help us do just that, today I am chatting with Oliver Spock from Suite Analytics about the 5 levers of growth, harnessing customer data for e-commerce success. Now, before Oliver and I dive into our conversation, which a little heads up, I know is going to be good just based on the preamble that we've just had. Let me share some of our podcast picks, previous episodes that I think you're going to enjoy. The first one, discover the human elements behind the numbers with Monica Sharma Panetka. Definitely check out that episode for a reason which will become obvious in just a few seconds. And also check out why web analytics are key to growth with Michael Loban. That was another great episode, actually. You can access our podcast picks and our entire podcast archive for free on our website at ecommercepodcast.net. Plus, if you're there, sign up to our newsletter because we send you the links to our podcast picks along with the notes from today's conversation with Oliver. They all get delivered straight to your inbox, totally for free at no cost to you, which is pretty amazing. So do sign up for that. Now, are you struggling to grow your e-commerce business? Do you feel like you're constantly spinning your wheels trying to figure out what to focus on next? Well, let me tell you, I have been there and I know how frustrating that can be, which is why we love the fact that e-commerce cohort sponsors the show. E-commerce cohort helps companies like yours deliver an exceptional customer experience online that drives results. And to help you get started, we're excited to talk about the free resource put together called eCommerce Cycles. It's a mini course which walks you through a proven framework for building a successful e-commerce business. I'm going to show you the specific steps we take in our own e-commerce companies so you can see exactly how to put those concepts into practice in your own business. And the good news, it's completely free. You don't even need an email address, and you can check it out at ecommercecycles.com. So do check out that training, free training at eCommerce Cycles. And it's going to help you deliver e-commerce well. So do check it out. And it's great. It's great, actually, that you can do that. We love it. I was in the States recently, took some people through eCommerce Cycles. Business for turning over about 10 million a year. Brilliant. We had a great time doing it. So it does work. Now, let me just go back and give a huge shout out to Monica, who has connected Oliver and myself today. So check out more information about Monica. If you've not listened to her episode, do check it out, as I mentioned. But you can see more about her at businesswithmonica.com. And Monica is actually also going to be in the cohort mastermind, sharing her wisdom and insight, which I can't wait to hear. So, Monica, absolute legend. Now, let's talk about Oliver, the retail whiz who turned tech wonder kid. His entrepreneurial journey started in the world of linens and lamps, where he spearheaded the White Company's meteoric rise from a modest £6 million venture to a whopping 50 million turnover. But Oliver didn't stop there. Swapping cashmere throws for code, he harnessed his retail savvy to create Suite Analytics. I just love the way that these bios are written. Now he's on a mission to empower SMEs, demystifying the world of data and turning it into a powerful tool for success. As the architect behind the platform he wished he'd had as a retailer, Oliver is your go-to guru for converting numbers into victories. So get ready to dive into his world where data reigns supreme and every figure tells a story. Oliver, great to have you on the show, man. How are you doing?
I'm very well, Matt. And if I could have the same script writer as you, I'd be really happy because they do one hell of a job of conversing someone's career into some great lines. So that's,
Yeah.
I'll have to work on that now.
Well, just use that one, Oliver. That's totally fine. The team at Orient Media who produce the show do a great job with these bios. And every time we have a guest on the show, it's the one I just look forward to reading the guest bio. I don't actually read it before we do the recording because I like the surprise of it. They do such a great job with that. So, well done. Well done. So, Oliver, before we hit the record button, you told me that you were dialing in from the sunny climates of Spain.
I am, Matt. I'm sitting in Valencia. My CPO for Suite Analytics lives here in Valencia, and myself and my CRO have come over here. So I hope you're sitting somewhere rainy, but having left England before of it, I know it's not for one that that's the case. So the contrast isn't as good as I'd like it to be, but it's certainly nice to be, like always, it's nice to get together with the team. We work in a very virtual way. I've developed a team in Krakow. I have a team in England, and I have the girl who lives here in Spain. So it's always good to get together anyhow.
Yeah, Valencia is not a bad place to get together with people, is it really? It seems like, it's not a hard job.
Problem is, we all know anybody who goes away, once you say you're going abroad, people assume that you're playing golf and doing nothing else. And and what I'm first thing I'm doing, I'm spending my time doing a podcast with you, Matt. I mean, I'm out of the restaurants, not on the beach. So maybe some work gets done sometimes.
Maybe. I've just come back. I was saying to you, I've just come back from a 3-week trip in the States where I was at Sub Summit. And if you're a regular to the show, we've had Chris George on the show talking about Sub Summit. We had a great time over there. We recorded some podcasts. We've got some great guests coming. All of that's coming. Anyway, the reason I'm telling you all of this, Oliver, is when someone asked my daughter, why am I going to the States? She was like, because of work. And if you're not watching the video, I'm doing that sort of funny inverted commas with my fingers. And that's just what she kept doing. It's work, Dad. You're going for work, aren't you? And actually, it was really, you're with people 24/7. It is a bit of work. To be fair, I did manage to head to the beach for a day or two, so it wasn't all bad.
I'll bring you up in a couple of days, and we'll see who's got a better tan.
Absolutely. I tell you what, it's not going to be me. I have one of those skin types that just goes pink as soon as the sun comes out. I just don't tan. But it is what it is. We all have our burdens to bear in life, don't we? So, Oliver, let's talk about your career a little bit here. So, it said we read in the bio that you were involved in the White Company, which is, for those of the folks outside of the UK that might not know what the White Company is, just explain.
Yeah, so the White Company, I think, it's now in the US. So hopefully, if you've got people living in the US listening to this, it's, I think, a really good story in terms of it. The journey that we went on, the classic multi-channel journey. I took over the White Company where it was a mail order business. We were way back in the time when Google Ads didn't exist, so we did a really early website. We were really early into putting it online, and then moved on, and we started stores as well. So, I always think of, how do you grow a business? What I learned when I was at the White Company was, there are various levers that you can pull, and it's really important to have a grasp of them. And for you, for your American listeners, all my learning actually came from William Sonoma. And, as I explained, I got this problem where I didn't know how to grow. And then fortunately, some guy from William Sonoma came over to the UK and told us all about multi-channel. And that unlocked a whole world of possibility for me and the White Company. We were really early adopters of that whole model.
Okay.
But, it's moved forward. We're in a digital age of multi-channel now. So, there's variants from what it was, but the same principle. We've all got targets. You all want to grow, and you've got to work out what's the best way of doing that.
Yeah, absolutely. Absolutely. Well, I mean, you've touched on the 5 levers of growth, and this in the show title. So let's start there and see where the conversation goes. Just tell us what those 5 levers are.
Yeah. I love a conversation where I've got 5 points, and then we'll get halfway around the thing. I won't remember what they are, Matt. I'll cheer you up. I have got 5. So first of all, it's all about customer data and absolutely the fundamentals. If you don't understand your customer data, in my view, we haven't got to start. Then we talk about changing product and how you define your product strategy. You've then got channel, which is really important. And that, I mentioned the multi-channel model, the old-fashioned multi-channel model, but the new multi-channel model is digital first. It's different marketing channels, but it's marketplaces as well. So,
Mm.
the e-com world is very complex and very broad,
Hmm.
and so that all fits under channel in my model.
Okay.
And then you've got international. There are lots of brands. We work with over 100 brands. We're seeing some enormous successes across internationally. And, as I perhaps sort of bring this back to a framework in a moment, you've got to have different things that you can do to change the shape of what way you're going and the numbers. So international should, particularly as things become, you've got globally, you've got lots of other ways now of addressing international markets. So
Mm.
international is the fourth lever of growth. And then the fifth for me is always around brand. And in brand, I cheat a bit because I put site metrics into it as well, because ultimately, for me, the brand, and for most people, that's a manifestation of website, but, there's all the soft bits around what it looks and feels like. But, I'm really all around, numbers and what numbers you have to move. So,
Mm.
a whole site funnel is a crucial part of it. And that whole brand experience that can be measured in that way is what I put in that fifth lever.
So you got these 5 levers from the chap that came over from the States whilst you were heading up the white company.
Now, what I got from the chap in the States. So my experience was I took over the white company. I was MD and I had a very simple incentive target, which is really good discipline, which was I had to grow at 40% a year for
Wow.
5 years. Yeah. And my remuneration was I got rewarded in equity for growth, and I got
Hmm.
rewarded in pound notes for delivering profit. And that, you know, those two, understanding how those two work together are really, really important. And so even I could do a spreadsheet that went 1.4 times 5 times.
Hmm.
And, I knew that, that meant I had to get to 30 odd million in 5 years time. And it was only really when I began to understand customer metrics, did I have a clue of how I was going to do it.
Mm.
And the Williams Sonoma guy came and helped me. Was at that point I'd hit, you talked about spinning wheels. I'd hit the spinning wheels point. I didn't know, couldn't recruit any more customers at my required cost per acquisition. I didn't know what to quite do. And we were pulling the product lever, and the product lever, unfortunately, isn't instantaneous, like
Hmm.
most levers, not instantaneous. Um, but he effectively came and taught us that actually, if you offered a customer more channels, they spent more. So his example was they spend $180 if they've got one channel, they spend $240 if they've got two channels, and they spend $360 if they've got three channels. And for me, that was a hallelujah moment because, well, okay, now I can get more money out of our customers. If I'm
Hmm.
struggling to recruit the number of customers I need, let's get more money out of them. And that was the real takeout from that. And then the other bit that really supported my sort of understanding of Lane's growth was that there's a top consultant in the space called Jim Fulton. And Jim was the person who, explained to me the model of how you pour people in at the top of a D2C business and they flow down through over years in order to understand where you get to in 5 years
Yeah.
time. So it's the same principle. If you want to, if you're going from 500,000 to 1 million, or whether you're going from 5 million to 10 million or any other number, the really fundamental first thing for me is you have to understand how those customer metrics work.
So, well, let's dig into that then. So, the first point, your first lever is customer data. I think you made the comment that if you don't have that, if you don't understand that, you don't really have a business. Why are you so strong on that? It's not that I disagree, by the way. I'm really curious to know your thought pattern here.
Yeah, look, the really key thing is, so I speak to lots of people like you do, Matt, in with your various hats. And my principal thing is I ask people where they want to go. So, do you want to achieve 1 million next year or
Hmm.
wherever it is? And then the next question I ask them is, do you know how many new customers you need in order to achieve that goal? And I reckon in about 80% of my answers, I get a no to that. And if you don't, because the dynamics of acquisition are so different from retention and they differ for every business. Yeah. unless you know how many new customers you need to grow, and you know what it costs to acquire a new customer, you haven't got a Scooby's chance of achieving what you need to in success if you don't know those two numbers.
Yeah.
So, and if you don't know those two numbers, for me, that's a red flag that a business is less likely to achieve what it wants to achieve. And from my own experience, it's only really understanding that I was then able to understand how, if I could acquire a customer in year one, well, that customer, the probability of that customer then still delivering me value in year three is perfectly understandable from history or even just modeling it. And it, you can't leave, you can't go from, I went from 6 to 50 million. You can't just get 10 million extra sales in the last year by going, oh, I'm on day one, I need to do something. You've got to build that model. So you've got that base of customers that effectively allows you to achieve what you're wanting to do. So just for me, for anybody running an e-commerce business, if you do not know how to translate that statement of I want to grow at 50% or I want to grow from 1 million to 5 million into demonstrable customer metrics, your chances of success are very slim.
It's a really powerful statement, Oliver, because I'm just thinking throughout all the years I've been doing this, I've sat under a lot of people who have asked, where are you? Where do you want to be? But I don't recall anyone ever then following up that question with, and how many new customers is it going to take to get there? And what's your cost of acquisition? We talk a lot about cost of acquisition, both in cohort and on the podcast. So the CPA is quite an interesting thing, but understanding how many new customers it's going to take to reach your turnover figure. I don't know of many people that have asked that question, which I find quite insightful. Where did that revelation come from?
That came from me, from my own experience. So I as I said, I had this simple spreadsheet, the 1.4 times version. And then I learned that, in order my second year, I needed 75,000 new customers to get to it. And then I knew that the next year I needed 125,000 new customers. And I did, in the old world, I did a massive extrapolation of what I'd done on cold lists, direct mail, and I lost 250 grand in a season. And, that's painful when your bonus is attached to profitability. But what I learned out of that is that actually I could afford to lose money, because as the lifetime value of those customers unwound, hallelujah, in year two, that came good. And I then understood how I could start achieving that next bit of target, because I had a bigger base. And it's that whole circular interplay of, when do you bring customers in? How long do they last? And there's different, it's different metrics for every business. If you're a jewelry business, for instance, you're probably 90% reliant on new customers. A jewelry business recruits a customer, in year one, probably only 10% of them come back in year two. If you're a fashion business, and it's a good fashion business, they've probably got 40% people. And unless you understand, you understand what the retention rate is, what the average order value is, then, and how many orders per customer you may get in that time period. Those are what I'm sorry, get a bit granular into metrics, but you really need to understand those. But the simple question is, Matt, as you would say, is, do you know how many new customers do you need to acquire to achieve it?
That's really good stuff. And then do you break that down further, Oliver? Do you look at where your new customers come from? So I'm just very simply thinking, well, currently my 30% of my customers come from Facebook, 20% Facebook ads, 20% come from Instagram ads, 50% come from Google Shopping. So I know it's a very crude breakdown. I don't actually know what the data is, but would you break it down then by channel? So if I needed 1,000 new customers, that means on these current percentages, I need to go and get another 300 from Facebook, another 200 from Instagram, and another 500 from Google.
Yeah, yes is the answer. But I think there's a step before that, which for most businesses, and particularly for earlier stage business, is what you need to know is you need to understand what you can afford to pay for a customer. Yeah. And that's what you can afford to pay, not based on average order value, but on whatever view on lifetime value that you need to have. Because going back to that insight I was sort of talking about from my own white company experience, I learned that I could lose money on the first order, but it created profit down the line. And what's really important for any business, we have a thing called a margin calculator in Speed.
Mm.
Yeah. You need to set the metrics up before you get into channel. Yeah. But just effectively, can you afford £27 or £50 or what is it? Can you afford that, after delivery costs, after all those things, after returns, what can you afford to spend? Because, you know, ultimately as a retailer, there are so many numbers in marketing that we all have to deal with. So many platforms that tell you
Hmm.
hot numbers. The only thing you really know is, how many sales you've got, how much money you've spent.
Hmm.
Yeah. They're the hard numbers. Yeah. And so before I get into, really get into the nitty gritty of which channel and some of the conversation about attribution, you really just have to know your target ROAS, as we call it. Yeah. Which is
Mm.
the hard cash number of, what sales to come from first time
Hmm.
customers, and how much have you spent every day? And that's every day, retailers, with traders, in my opinion, you have to know that number every single day of your
Mm.
trading. Then if you're massively above, you've got a great opportunity to go and maybe spend some more money and go faster. Or, if you're below, then you really need to be looking at how your channels are performing. So so though absolutely I believe in attribution and what trying to understand that.
Mm.
Yeah. Most cases, just make sure you understand the fundamental first.
Yeah. No, that's a very good point. That is a very good point. And it's an interesting statement you bring up on attribution. But I want to talk about lifetime value a little bit. You mentioned that one of the things that I've been hearing, in fact, at Sub Summit, where I was at a few weeks ago, one of the things that they were talking about a lot there, given the state of interest rates. So I don't know when this show is going to get aired, but we're now in June 2023, and interest rates are not great either in the UK or the US. They're quite high. The cost of money is is now expensive. It's so there doesn't seem to be as much capital floating around the system. So what they've noticed is, and this is the chap from Google was talking about this, was actually there seems to be a pulling back on what they call the CAC to lifetime value ratio, isn't it? Or the lifetime value to CAC ratio, which was touted, the magical number, I think, was 3-1. So for every pound you spent to get a customer, the customer should give you £3 or, $3 back. They're saying actually one of the
And
things
can I
they've
just really drop that? There is
yeah,
no magic number that people can generically work of. What you have to understand is the metrics for your business. Because if
exactly.
you're an 80% margin business, you might be able to just on a 2%, two times
Mm,
ROAS.
yeah.
Yeah. And if you're not, you may need a 5 times ROAS. So just sorry to interrupt you there, but I'm always, I don't really like single metrics
No.
sometimes without people understand. So I apologize. They may have given a broader, but I just don't like sort of getting everyone boxed down into we should leave here with a 3-1, target ROAS out of here.
Yeah, no, not at all. And in fact, one of the things that they were talking about is these ratios are now moving and they're starting to become much more target specific. But one of the interesting things that they were talking about is because the cost of acquisition of new customers is going up quite considerably. There has been a massive shift now into retention marketing and engaging um, your returning customers, and also the customers who used to buy from you but no longer buy from you. Seem to be the two popular things that people are going after. And I don't know if you've spotted this, or if this is a trend that you've seen as well.
Yeah, it is a trend, and it's something that I'm slightly against, to be honest, because if you have a customer forecasting model, yeah, I can absolutely guarantee you that it's very rare that you can achieve your goal through retention metrics. Now, obviously,
Mm.
that's not if you're a vitamin company that does monthly, but in most sectors of the industry, yeah, if I gave you a 4-year model out of our growth model, yeah, and you start cutting down on acquisition, I can tell you you're not going to end up where you want to in 4 years'
Mm.
time. And so I'm not being, of course, everyone, it's harder times and of course everyone needs to focus on their retention. But in my experience, it's very difficult to fundamentally change the shape of your business by just focusing on retention. Mm. It's fine as long as you understand what the impact of cutting down on acquisition is. then fine. Absolutely cut what's cloth to the right size at the time. But, you can't, going back to this, are you going to be successful? This is a perfectly modelable situation. So if you recruit 70,000 customers last year and you're going to cut back and recruit 50,000, that means that next year, your pot is going to be smaller. Your overall pot has gone up, but your current pot has probably gone down. And I very, very rarely see a business actually truly, hit onto the growth curve if it doesn't focus on acquisition as well as retention. I'm not trying to, clearly I'm not dishing retention. Retention is sort of bread and butter day job. Yeah. But the fundamentals to move most businesses is about acquisition.
Yeah, and I like that because when there were as these concepts and ideas were coming out about retention marketing, it felt like short-term gain at the expense of long-term growth because like you say, you're reducing the number of customers today, you're increasing profits today, possibly, but you've got a smaller pool to convert to returning customers next time, and that doesn't make sense to me.
It's can I just restore that because let's say you've got you manage to get 30% of your customers come back every year. In my experience, you might manage to increase that to 33%, and that won't be your day job. I mean, of course, email. You should be doing email properly. You should be doing all your basics of retention properly. But I've so often sat with people said, okay, we're going to really go into retention. And I can tell you from evidence that probably they might move their retention numbers by 10%. Yeah. You model that through, and I can assure you growth just goes off a cliff if they stop.
Yeah. No, I totally agree. Well, Oliver, excuse me.
I'm disappointing, Matt. I'm sure that's not going to make very interesting listening.
No, sorry. It's I'm just looking down in my notes, and we've covered point 1 of your 5 levers for growth. So what I want to do is jump forward a little bit because you keep using the word channel. So let's go to lever number 3, which is channels. And this was your
product quickly, just so because the product for me is really important. Or can I just? I'm now overstepping my mark barrier.
No, you're the guest. You can do what you like. We've only got so much time, so let's go through it. Let's go through it.
So because again, it all relates back to understanding your metrics. So if I come back to my white company experience, bed linen produces a really great AOV, but a really poor return rate.
Yeah.
So effectively, what I learned was that if I kept on recruiting the same number of people, they didn't come back fast enough for me to be able to achieve my growth target. Because if I only stayed with that, I needed far too many people to come in at the top of the funnel all the time. I couldn't do those at the right cost per acquisition. So that was the learn that I took from my model. And then the easiest way to change your model, and is when I say easy, it's in inverted commas, but is to introduce new product in order to change either the average order value or the number of orders per customer. So in my company land, we went gift, we did baby, we did all of those, and then ultimately we did clothes. So effectively those changed my metrics around what value I could get out of each customer. So in terms of, going back to the same thing, customer forecast model, if you can't, if you've got, you've only got a certain set of numbers, you've got to have a theory about how you're going to move. And we thought we could move our number by having different products. People seem to like us. Yeah. If you've got permission from the brand to sell, you work out what you can sell more of. What else can you sell to them? We tried garden furniture. That was absolute disaster. But that we didn't have brand permission. But for the things that we did, people understood why we were trying to do it. And that was driven by us. I understood that I couldn't recruit more customers. So I needed to get more value out. And that's product strategy in order to drive.
Yeah. And that makes a lot of sense to me because I was always told, Oliver, that there's only 3 things that you can do to grow your business: increase the number of customers, increase the average order value, and increase the frequency with which those customers purchase from you. And it's always made sense to me that you work on those 3 levers. What are my new customers? How do I get to increase the basket size on the e-commerce website? And how do I get them to increase the amount of times they buy from me every year, right? What's the frequency? Which is why whenever I've done e-commerce, I've always been really interested in products or websites that have the ability to have an increased customer frequency order. And so you work on those three things, and growing new customers is not the only thing you can do. You can work on average order value. And so things like product mix become really important then, don't they? So how much they're ordering now and whether they come back sooner all depends on the products that you have.
Exactly. Everything comes back, everything really actually relates to customer and product. We've got customers who try and sell them stuff and, change what you said, if they believe you, sell them. If you make it really simple, if you sell sausages, don't just sell one type of sausages, try and with two types of sausages and I bet you sell more. Yeah. And it's the same principle, but we, slightly more broader, and it's got risk, moving into different product categories have different risk profiles and things like that. But, it's a key, going back to your AOV number, you've got to move that number.
Yeah.
You have to think of something to do to do it.
Yeah, totally. Okay. Can we move on to channels? I'm just too keen and eager to get to channels. So explain what you mean by channels. And I'm really curious, especially with your hallelujah moment that you had here.
Yeah. So, and this is really important for me in terms of things. So early, I'm afraid, as you probably not everyone's seeing this, but I'm old. So, I've sort of been a retailer for a long time. So, I existed in a world where, there weren't Google Ads, there weren't all these things. It really was early stage. But, what really matters is that, you have to have a fundamental belief that the customer wants choice. And if that choice at the moment is they want to buy from your e-commerce site or they want to buy from Amazon, if you're going to offer both, you're going to get more sales. Because different customers want to be served in a different way.
Yes.
So that's a more modern example of in the old, what we did, which was web, mail order web shops. Some people, taking that example, some people like to buy offline. They want to go into a physical shop. Some people want to the convenience of buying online. And so that's the theory you just have to believe in, that the more channels you offer that are appropriate for a customer, the more sales you're going to get. And so if you're only in, if you're an e-com site, and again, all of these need to be evaluated, but, maybe you do need to, your product may or may not be appropriate for Amazon, or maybe there may be a more appropriate marketplace for your sector, but you do really need to, if your aim is to grow, you've always got to answer your question, well, how the hell am I going to do that? And one of the things you need to think about is, well, are there more channels that my customers would like to buy from me?
And so what are some of the channels that we should definitely be thinking about?
Yeah. Well, I think so. I still think, in an old fashioned world, we're seeing lots of brands do pop-ups. So, if you giving people the experience in hand, I'm assuming this is mainly with retail brands. Pop-ups, I think, are proving to be popular. The other point about channel is that channel and marketing will get ever closer. So in a way, in the States in particular, now you can shop on your Instagram feed directly. TikTok has TikTok Shop. So all of these channels, and maybe marketing, but I'm also selling in the same space. So there's a bit of a mishmash of what really is a channel at the moment, what's a sales channel, what's a marketing channel. And, assuming that most people are doing Google, they're doing Meta as their advertising channels, a bit like sort of, should I add Amazon or something else? You should probably ask yourself, should I be doing TikTok? Should I be doing Pinterest? And those are probably once you've done, assuming Google and Meta are 1 and 2, those are probably the next ones to go to. But you shouldn't just keep adding, marketing channels down the e-com route, but you should also ask yourself the question of how do your economics work if I'm going to do Amazon or one of these other ones.
Yeah. No, it's a super obvious. I say super obvious, but it's a really interesting point, isn't it? When you look at things like Instagram and Facebook, part of me has wondered why they haven't done it already yet. They've got all of these people who are ready to buy stuff, and all they have to do is sell. Well, we're just going to become Amazon. We're just going to sell that. So if you promote stuff on Instagram, well, you can sell it on Instagram. We're just going to take whatever 3-5% commission off the top. You're going to fulfill it. They don't have to carry any stock. It would be. I would love to talk to someone from Instagram about why this has taken so long to roll out, because it just intrigues me that it's taken so long to roll out. But you're right. It's just going to be.
Actually, Matt, just on that, and why they've why Amazon have built such a strong position, because they own the logistic there, and
Yeah.
they're now adding the marketing there. So Amazon is, and for some areas of the world, they're now effectively going to start offering logistics without you being a seller on Amazon.
Mhm.
You know that's the model.
Yeah. Yeah, it's really interesting, isn't it? I mean, it fascinates me how Amazon have done what they've done, to be fair, and there's a lot we can learn from them. And you think there's some very clever people working behind the doors at Amazon. Um, but yeah, so I get what you're saying about channels, and so one of the things I guess that people will struggle with that whole concept is, if I sell on my website, for example, selling on Amazon feels like, especially if I'm just starting out, or if I'm a new company, then trying to sell on Amazon is going to feel like a really big jump. Like it's enough work trying to keep up with what I'm doing here. To then add Amazon into the mix is gonna throw some extra baggage in that maybe is a little bit too much for them.
Yeah, Matt, I think to us, age-old thing of keeping things simple. What I think is really important is that you don't. Is don't. Life is complicated. Yeah. What really matters is understand what you're doing and understand how far you can push it. So for me, my penny drop moment was I couldn't recruit any more customers with the business model we had as we were at the white company selling bed linen towels and no other channels. You know, I couldn't. I just lost too much money. I
Mm,
couldn't hadn't got, and it's not easy to unlock what the next winner is, but I'd really work each channel to its absolute max before you start adding complexity. So, I really, if people are in early stage businesses, don't go and do TikTok and Google and Meta
mm,
and Pinterest. You won't have a clue what's going on, to be honest, or what's working, which will then become, if everything's working, hallelujah. But if you get to the point where it's not working, then you have to start unpicking. You've got no idea. You have no idea about how you unpick it.
yeah,
And in the same way, don't do Amazon and e-commerce until you really understand what you're doing in one or other. Make
yeah,
sure you understand what you're doing before you start moving through the channel gears.
yeah. No, fantastic. Listen, Oliver, I'm aware of time, and I'd love it if you could just explain. Maybe let's go to a slightly different tack. What is Suite Analytics? You obviously moved from the white company to Suite Analytics.
Yeah.
What is it, and what drew you into that?
Yeah. So I mean, I hope I've sort of communicated sort of my passion for growing businesses. And during I'd done various other things under the white company, and I always know, something I've been good at, successful at, some things have been a disaster. But I'd always known if I didn't know what the, these kind of numbers that I'm talking about, these principles, then I just didn't know what I was doing. And so what we're doing at Sweet Analytics is trying to make sure that for SMEs, it's really easy. We're self-serve. If you're on Shopify, Woo, BigCommerce, normal cloud platforms, you can just plug in all our things, and we can deliver these metrics to you out the box that I think really helps you understand what it
Mm,
is that you need to do in order to make your business grow. So that's what I wanted to do. There's a whole, history of how analytics have moved, since I began my career. But, what I really wanted and what I'm passionate about is, being able to deliver to people really simply, how you can get to, what we're talking about here. Because
yeah,
otherwise it's just hard work. If it's too hard work, people don't do it.
yeah. Well, yeah, that's the problem, isn't it? And you're right. You've got to keep it. I mean, with everything, we say this to clients, don't we, all the time? You've got to keep your website simple if you want people to buy off it. And it's got to be the same with everything else. I mean, the theory stands up everywhere, right? It just does. Oliver, listen, if people want to reach out to you, if they want to connect with you, if they want to find out more about Suite Analytics, what's the best way to do that?
Yeah. Thanks, Matt. It's oliver.spark@sweetanalytics.com. So as per my name plus sweetanalytics.com.
And so the website is suiteanalytics.com. I'm guessing
Yeah.
if people want to head to the website.
Exactly. Thank you, Matt. You did exactly. Or LinkedIn again, Oliver Spark on LinkedIn. So either of those would be great to hear from people, because I mean, I'm really happy to have a chat with anybody about how you grow your business.
Fantastic. I'm just making a note here to make sure that I'm actually connected with you on LinkedIn. So we'll make sure that we are doing that. Oliver, listen, we will, of course, make sure that all the info and all the links to you are in the show notes. So if you are listening to the show, if you're driving in your car and you've not been able to jot it all down, don't panic, because they will be in the show notes, which you can get for free along with a transcript at ecommercepodcast.net. Or if you're signed up to the newsletter, they'll just be coming direct to your inbox with all kinds of good stuff. So that will be coming through to you. But Oliver, thank you so much for joining me from Valencia, Spain. Thanks for, giving us a few minutes where you're not on the beach, sharing your awesome insights. It's been a thoroughly enjoyable conversation, and I wish we had a little bit more time because I've got a lot more questions, but we'll have to carry it on a separate occasion. So thank you, genuinely, thank you for coming on.
Thanks very much, Matt. I enjoyed it. And the great thing was we only did 3 out of the 5, so it's perfect. We did everything I imagined we would get to. We'd guess 5. At least I remember the
Yeah. But this is why I say at the start, what are they? Just so everybody knows, because if you only ever get to 3 of them, by the end of the show, people feel cheated, don't they? So, but no, it's great. Thank you. Thank you for coming on. What a great conversation that was with Oliver. And also a big shout out to today's show sponsor, the e-commerce cohort. Remember to check out their free training at ecommercecycles.com, where it's me doing the training. So as long as you've not had enough of my voice, you'll enjoy it, and hopefully it will be helpful. Now, be sure to follow the e-commerce podcast wherever you get your podcasts from, because we have got yet more great conversations lined up, and I don't want you to miss any of them. No, I don't. So make sure you are subscribed wherever you get your podcast from. Now, in case no one has told you yet today, you are awesome. Yes, you are. Created awesome. It's just a burden you have to bear. Oliver has to bear it. I have to bear it. You've got to bear it as well. Now, the e-commerce podcast is produced by Orient Media. You can find our entire archive of episodes on your favorite podcast app. The team that makes this show possible is Sadaf Bainon, Estella Robin, and Tanya Hutzelak. Our theme song was written by Josh Edmondson. And as I mentioned, if you would like to read the transcript or show notes, head over to the website, ecommercepodcast.net. So that's it from me. That's it from Oliver. Thank you so much for joining us. Have a great, fantastic week wherever you are in the world. I'll see you next time. Bye for now.